Hello guys, I welcome you all to today's video. In today's video, I will be discussing with you how to secure your profit trading boom and crash. Okay, how to secure your profit trading boom and crash. We started out this training session yesterday. Okay, this series of training yesterday. We had the intro yesterday. I told you why you should secure your profit while you are trading, most especially if you are going to be trading for a very long time. So if you missed out of yesterday, you can go back to the channel and watch it. This is it in green color. Okay, so you can watch it so that you will understand the way it works. Okay, before watching today's own. Okay guys, before I go fully into what we have for today, I welcome you all to Qora Digital Cash. In case you are just joining us for the first time, here is a channel which I used to share with you my ideas on how you can make some money for yourself online. All you need to do is just to take your time to browse through the channel, watch some of my training videos, and make sure you practice and perfect your skill first on your demo account before trying them out on your real account. This is very important. And if you love my videos, can you give me thumbs up and share with families and friends? And of course, if you are yet to subscribe to this channel, can you do so right away? Check below this video for the subscription button, click on it, and also turn on the notification bell to all notifications. That way you will always be notified whenever I upload a training video like this. And if you have any question at all, feel free to contact me. My contact details are displayed on the screen, and I will be dropping them off in the description box below this video. Okay guys, let's quickly go straight into what we have for today. Like I said earlier on, okay, yesterday we started on an important topic called how to secure your profit. Okay, this is very important. It is always important you learn to secure your profit, most especially when you are trading. Okay, while explaining to us in yesterday's video, I said there are three things very important. Your trend is very important because this will allow you to trade for a very long time, and while trading for a very long time you need to be able to secure your profit. Okay, then you should know your support and resistance level. This will help you to know your entry point and your exit point. And right here I told us about how we can secure our profit. Let's say the market is on uptrend and it is going up. This is our entry point. Right here, well, is where the price action goes to, so we can introduce our stop loss in between. Okay, to secure the profit between the entry point and our exit point. Okay, to secure the profit between the entry point and the current action price. And where the stop loss is. Okay, sorry about that. Where the stop loss is. Okay, which means what am I trying to say? If this is your entry point and the price action is already going up, it has gotten to this level. This is where the price action is at the moment. This is your entry point at the moment. This point is your entry point. Okay, this point is your entry point. Then you can introduce your stop loss to somewhere here. Okay, stop loss to somewhere here. This will help you to secure your profit between this region and your entry point. So that is the function of the stop loss. Okay, this the profit between this region and this region will be locked out of the market. Okay, only this one will be exposed to the market. Okay, so I'm going to teach you how to put this into use so that you will understand how to go about it. So let's quickly go straight to the chart in order for us to do this. Okay, but before we go straight to the chart, we will be looking at this in two different ways. Okay, the first thing we will be looking at, we doing this on a normal trend. Okay, on the normal trend for boom and crash. Okay, normal trend for boom and crash, we will be looking at it on normal trend for boom and crash. Then of course we will be looking at it for spike trading. Okay, we will be checking it out also for spike trading. So this is the second aspect. Okay, but I will start with the most difficult. Okay, we will be checking it out on spike trading, but this, which one is the most difficult? This is going to be the most difficult because of the spikes. Okay, stop loss can't stop spike. Okay, so definitely if you are trading the normal trend and if there is a spike, okay, you might not be able to use the stop loss to hold on to it, okay, or to lock up your profit. So that is why you need to know how to do it in the right way. Okay guys, so let's go straight into the chart. Let's go straight to the charts. Okay, like I explained earlier on, okay, if you are trading boom and crash, okay, let's say you are trading the normal trend in boom and crash, and definitely when there is a spike, you can't use stop loss to hold it. Yeah, I'm repeating that again. You can't use stop loss to hold it, so which means stop loss cannot save you from any spike. But I'm going to teach you how to use stop loss to lock up the profits for yourself. Okay, for you to do that, you don't need to trade on 1 minute time frame. Okay, you don't need to trade on 1 minute time frame because we get spikes happening easily on 1 minute time frame. Okay, if you have to do that, you need to start from 5 minutes. Okay, 5 minutes and above will make it very easy for you to do. Okay, so I will be starting with 5 minutes, then later on we can check out 15 and 30 minutes. That even makes it easier. Okay, because 5 minutes is still closer to 1 minute time frame. And this is the way it works, guys. This is the way it works. Before you can go into any of them, you need to be sure of the trend. Okay, if you are not sure of the trend, then I don't expect you to try it out. Okay, for instance, I'll make sure the trend, the trend is in support of what, the price action. Make sure the, I mean make sure the signal you are getting is in support of the trend. Sorry, make sure the signal you are getting is in support of the trend. And here is a buy signal, and of course it is in a support of the trend. This is it. Here is a buy signal and the trend is on uptrend at this particular point. So which means if you are coming in right here, and it is going up, when should you introduce your stop loss? Is it going to be immediately? No, you need to make some profit before you can introduce your stop loss. So which means this price action has gotten to this level. Let's say it has gotten to this level already. Definitely you can now introduce your stop loss to somewhere here. Okay, you can see this spike that happened, this crash down that happened. Okay, it takes the whole of the 5 minutes to happen. So definitely it's not going to happen immediately. It's not immediately that it happened that it got filled up within 5 minutes. Okay, no, it's not. It's this must have taken like 2 to 3, this must have happened like 2 to 3 times before the end of the 5 minutes. Okay, so that is what you need to understand. So you can see that it didn't even get to your stop loss. Okay, check out when it got to the stop loss. So it has taken some time before it got to the stop loss. Let's say you have let's say you actually put your stop loss to somewhere here. You can see that probably it will have happened like a second time before it will get to your stop loss. Okay, and maybe it won't even push it backward till the end of the crash, okay, before it will take you out of the market. But let's say the last one actually got you to this end. Okay, the last one actually got you to this end. You can still see that you are keeping a lot of profit. You are locking out a lot of profit in your balance. Okay, you can see this. You can see the profit between the entry point and your exit point. Let's go straight to the jump ball so that you see what I'm trying to say. This is what I was trying to explain. Let's say we are trading crash 500, and this is our entry point. Okay, this is our entry point and the market already going up. Okay, we introduced our stop loss. To somewhere here, and it has gone up. Okay, you can see what I'm trying to say is that a single spike, we are on 5 minute time frame, single crash down, we not consume the whole of the 5 minute candles. Okay, it can take like 2 to 3 of it before it will be consumed. It can take like a 2 or 3 of it before it will be consumed. And even if the last one got to the, let's say the last one got to the entry point, then definitely that is when it should take you out of the market. Or let's say the last one actually pushed your stop loss backward a bit, it will only push it to this level. Okay, it will only push it a little bit below this level, and you still have a lot of profits locked out for yourself, okay, in your balance. So that is the way it works. That is why I said you shouldn't use it on 1 minute time frame, because of the reaction of the market on 1 minute time frame. Okay, so that is it. So let's see more examples. Check out here. Here is another entry point. Let's say you decide to come in around here, and let me remove the stop loss. Okay, this is going this is the price action. It has gotten to this level. You can introduce your stop loss to somewhere here. Okay, to somewhere here. You can see this spike. It happened. Definitely about 2 or 3 of it will have happened before the end of that 5 minutes. And let's say the last one, the one that got it to the stop loss happened, and definitely that was a very long one. So it might take like 2 to 3 minutes. 2 or 3 of that for it to get to that level. But let's even say that this particular spike push the stop loss backward. Okay, you can see it will only get it to this level, and it will close your trades for you. And at that stage, the profit between here and here would be in your balance. You can see that. I hope you are getting that. So I'm going to show you more examples. Let's go to boom. Good. I love this. So let me show you more examples so that you will understand the way it works. Okay, let's say this is your entry point at the top here, and the price action moved from there. It's not immediately that you introduce your stop loss. It moved from there to this level. Okay, so you can now introduce your stop loss to somewhere around here to lock up your profits. Okay, the profit between this second line and the first line at the top here is what you are locking up. Okay, so that if any spike should happen and it gets your stop loss, it will take you out of the market. Even if it's going to go beyond your stop loss, it won't go beyond this level, and you still have some profit for yourself. But if it does not, definitely you are cool to go. Okay, you can see that spike happened here, but it was a small one. It didn't get to this stop loss. Another one happened here, and it still did not get to where the stop loss is. It went down again. So as it is going down, you are advised to adjust your stop loss, okay, so that you increase the profit margin. Okay, so this went down again, spiked happened. You can adjust your stop loss. Okay, let's say you adjust your stop loss to somewhere here, okay. So spiked happened here, it didn't get to it, it went down again, it came down again, spiked happened, they didn't get to it, came down again, this one happened, they didn't get to it, then another one happened, they didn't get to it, then the third one that happened got to it and pushed it backward a bit. Okay, just a small push. Okay, you can see that your profit between this second line, because where the spike stopped, that is where it's going to close it. Okay, if it's pushed it backward, where it stopped is where it's going to close your trade for you. Okay, so your balance between, your locked up profit between this region where it stopped and your entry point will go straight to your balance immediately. I hope you are getting this. So that is the way it works. So let me quickly go back to the Jamboard again to explain that to us. Okay, let's say this is our entry. Okay, sorry, this Jamboard is not loading again. Okay guys, let's say this is our entry point right here, and the price action is going up. Okay, is going up, and we introduce our stop loss to somewhere here. It has been adjusted to somewhere here. Okay, and let's say there is a sudden spike that stopped here. Okay, you know we are on 5 minute time frame, so a single spike cannot claim the whole of the 5 minutes. Okay, so that stopped here. So definitely this our stop loss will only be repositioned to this level. Okay, where the spike stopped, where the spike that got to the stop loss stopped. Okay, it will only be repositioned to this level, and at this level it is going to close your trade. It is going to close your trade for you, because once the spike touch the stop loss, it will close the trade immediately at that place where the spike stopped. Okay, either, and even if there is another spike that happened thereafter, it won't be a major, it won't even affect your balance again, because the trade has been closed right from here. So your profit between this region and your entry point will be in your balance. Okay, will be in your balance. So any other spike that happen thereafter will not affect your balance again. So your profits will be in your balance immediately. Okay, this is a bit technical, but you will understand once you practice this. Okay, that is why I'm not advising you to try this out on 1 minute time frame, because this is just 1 minute. A single spike can claim a whole of 1 minute. In short, within a single minute you can have like 3 or 4 spikes happening within a single minute. Okay, which can claim the whole of your account. But on 5 minute time frame, that's 3 or 4 spikes that happen can happen within 5 minute time frame, and so far you are trading for a very long time. Just a single 5 minute time frame might not even get to, I mean, a single 5 minute candle might not even get to your stop loss, and if it gets there, it will only stop it at that point, and the rest of the profit will be yours. Okay, so you can practice this out. Take your charts to 5 minute time frame and make sure you know the right trend to trade it, and then you can place your order. And once you have made some profits, I'll make sure you have made enough profits for you to introduce your stop loss. Okay, and when you are introducing your stop loss for the first time, okay, let me quickly say this. Okay, let's say this is our entry point at the top here, and this is the current price action. Okay, there is no stop loss at the moment. The current price action. Okay, let me delete this. Let me delete. Okay, let me just delete everything. I'm going to bring it up again. This is our entry point, and this is the current price action. The current price action moved from the entry point, and it started going up and down, going up and down. At this stage, you don't introduce your stop loss, because the margin between your entry point and your current price action is still very small. So you need to get it a little bit widened. Okay, let there be some gap, okay, between your entry point and your exit point. Like at this stage, you can introduce your stop loss, and when you introduce your stop loss, make sure it is at the middle. Make sure it is at the middle. Divide it into two. Okay, for now, divide it into two equal parts, and make sure the stop loss is at the middle, so that when it gets to the stop loss, it will take half of the profit. I mean, it's going to keep out of the, I mean, half of the profit for you in your balance. Okay, so that is the way it works. So as it goes down, then that is when you can increase the profit margin between the entry point and your stop loss. Okay, so as it goes down, then you can still increase more. Okay, you can increase more. You don't have to let it be too close to your current action price, but as it is going down, you can still increase. Okay, you can increase. You can see the profit margin between here and here is now very wild. Okay, is now very wild, and right here it is now going back up, and this last spike, okay, got to our stop loss and pushed it backward a bit just to this level, and which means your profit between here and where the spike stopped will be in your balance. And check out, another spike happened after that, but that will not have any negative effects on your balance again, because the last spike has already closed your order for you, and your profit will be in your balance. So it is as easy as that. So I want you to watch this video over and over again so that you will understand the way it works. Okay, so that you will understand the way it works and you can apply it whenever you are trading. So take your chart down to 5 minute time frame and try this strategy out, and let's see what you are able to come up with at the end of the trading session. So I will be stopping right here. Remember, this is coming to you courtesy Qora Digital Cash, and if you have any question at all, feel free to contact me. My contact details are displayed on the screen, and I'll be dropping them in the description box below this video. If you are yet to subscribe to this channel, kindly do so right now, and also turn on the notification bell to all notifications. That way you always be notified whenever I upload a training video like this. Okay, do not forget to join us later on in the day for our $500 trading tips for trading boom and crash. Watch out for my next video. Until then.